Hello and welcome to our podcast, the Capital Insights Podcast. I am your host Abhiraj Agarwal, joined by Aditya Kaushik. Today we are diving into the world of finance with an exceptional guest, Mr. Lakshmikanth, the Vice President of Finance at Emids Private Limited. With over 2 decades of experience in finance, a bachelor's degree in accounting and finance, a certified financial analyst at level 1, a recent graduate from the prestigious Institute of India, IIM Bangalore. He's a true financial expert for us. Stay tuned to gain insights from this remarkable journey and his expertise.
Welcome, Mr. Lakshmikanth. It's a pleasure to have you on our show.
Pleasure is mine. Thank you for inviting.
So, you have been in finance for over 20 years, I believe.
That's right.
So, from the day one you came to finance till date, which is that one best financial advice you have received and followed?
Yeah, so I think, as you rightly said, I have over 2 decades of experience. And just to add to my introduction, and then I will come to your question. In the 2 decades of experience, I have experience right from basic bookkeeping, accounting, till the fundraising and the acquisitions. So I have acquired in my experience totally about 9 companies, and I have raised the capital through private equity or the equity infusion. Of about close to $600 million.
Wow.
Okay.
Right.
And to answer your question, the best advice I have ever received is that one should never mix up the short-term funds for the long-term purposes.
Right.
And the vice versa. Okay. Because the short-term funds are meant for the working capital management of the company, whereas the long-term funds are meant for the growth of the organization, like you invest or you acquire the company, which is more of the capital in nature. Right. Now, if you mix this both, okay, then that is when the disaster starts.
Right.
So if you are looking at the long-term sustainability of the organization, one should never ever mix these long-term funds with the short-term or the vice versa. So that's the best financial advice I've ever received. And I've been following not in my professional life, but also in my personal life as well.
Right.
So
one big advice that we've got from you is that short-term and long-term are bifurcated for a reason, and
Exactly.
mixing them is equal to a disaster.
Exactly.
Right.
That's right.
All right. So you have received multiple advices over the years, and it is possible that there's sometimes advices where they have not really stuck or they can't exactly be followed. So what is the worst financial advice that you have received?
Very good question. So see, in the entire journey, when we are as a finance leader, see, we are the watchdogs of the organization. We are the gatekeepers of the organization. We need to make sure we are the one single point of connect in the organization, which has connect with each and every department or the function in the organization. And trust me, we are always the bad boys in the company, right?
Yeah.
So many times, there are advices and the questions or the suggestions which come to us in the way of performing our duty. Some would be questionable, some would be strategic, some would be exciting. But we as a leaders need to decide which is the best advice which we can take it in the interest of the organization and in the interest of the stakeholders and in the interest of the employees. Okay. So we always believed in one thing, that there are no shortcuts to life.
Right.
So
Yeah.
so that's, we keep getting the advices. It's not I can't pinpoint one or two. We keep getting the advices. It's just we have to use our maturity and intellectual to decide which one to adopt, which one to reject. So that's how it is.
So, sir, I understand from your experience and your explanation that it is the circumstance that defines a good advice or a bad advice to that particular situation or that particular moment.
I would say it is the circumstance, and 2, in what ethos you are operating. Now, if you are operating in the ethos of high level of integrity and ethics, right, then there are some suggestions, irrespective of whatever circumstances which are,
Yeah.
you cannot accept those suggestions, right? So because for you, the values what you bring in terms of maintaining the ethics and the integrity, if those are kept in the pedestal, then I don't think the suggestions are dependent on the circumstantial.
Absolutely.
Yeah, it's again the kind of suggestion and who is giving.
Right.
So based on that, one needs to use their judgment and the maturity to implement.
So recently I was engaged in an internship with a fintech company called Grow, right? In that, throughout the internship, one advice that I learned is saving versus investing.
Right.
With the type of inflation that we have in India, either you can save, which is practically going to deplete your money with time,
Mm-hmm.
something like fixed deposit, which is not going to take your money anywhere,
Right.
or rather you can invest.
Right.
On a personal note, what do you think and do and apply in your personal life? Do you save or do you invest, or do you do a mix of both?
Yeah, so I would recommend, if you have not read this book called The Psychology of Money,
Okay.
Alright.
I strongly recommend each one of you to read this book. Okay, this talks a lot about the philosophy of money,
Right.
and the philosophy of savings, the philosophy of investing. Okay, and it's a very important book. It was, though I had 20 years of experience, or 20 plus of years of experience in the field of finance, and this book has given me immense learning. Okay, and to answer your question, which is the best thing, is it saving or investing? See, the first step to wealth creation, right, is that saving. The even if you're not generating
Right.
any returns, even if you're generating zero returns, saving itself is one form of investment, because you're conserving this cash for the future needs. Right?
Absolutely.
It could be any kind of contingencies in the future.
Alright.
The second step in the wealth creation process comes is the investing. Now, where do you invest? What do you invest? What kind of returns you want? All depends on multiple aspects. Okay, depends on individual personal goals, and depends on your DNA, how your DNA has been, depends on your, in terms of taking the risk.
Right.
Okay,
Yeah.
and depends on your socio-economic condition, depends on your current financial situation. And so considering all of this, one has to take a call on saving and taking the right investment decision, because we as a human being, we are all vulnerable to get influenced with our, with the creating the peer pressure. Right now, unless and until we know what we are,
Yeah.
what kind of investments I want to do, what is my, as I said, all this risk appetite, without understanding all of that, and if you just follow the investing in somewhere like the areas which you do not know, like blockchain or anything, just because my peer has invested, it is going to create a disaster. Right? And one other important, I keep telling to my I keep giving advice to my associates or friends, is that in this peer pressure, one needs to control themselves. Okay, let's say if there are two friends, Ramesh and Suresh, and Ramesh is invested 1 lakh and Suresh also invested 1 lakh. Ramesh has got 30,000 return, Suresh has got 10,000 return. What would be the reaction of Ramesh? Right? So immediately you will also feel stressed. Oh, why am I not getting the enough
Absolutely.
returns? Right?
Completely.
Yeah.
But if you know what am I, why am I investing,
Yeah.
and am I happy with whether this 10,000 return, am I happy with whether it is achieving my objectives or not? If yes, let the others achieve whatever they want, but you will not be stressed out. Right?
Absolutely.
So understanding yourself is most important aspect in the entire personal financing and saving.
Right. So this insight for us as Gen Zs has added a lot of value. That you just not go by your friends, peers, or family members, for that matter of
Absolutely.
fact. In one of my most recent books called Financial Sense by Prasanna Chandra, I think so, he also told about the same, that you have to analyze the situation irrespective of the fact you are investing in stock market or in fixed assets or in land property, for that matter of fact. It is a type of analysis that you do based on your current capital flow that's happening.
Right. Yeah.
So-
And one
Yeah.
other advice, one other advice I would give is that Don't put all the eggs in one basket. As much as possible, spread out.
So diversify.
So diversify is one aspect.
Yeah, diversify your asset classes, and these days you have very unique asset classes. The artifacts, the old
Right.
paintings. So even those are the asset class.
Perfect.
Yeah,
Alright.
but don't invest in one particular asset class. Diversify, and never ever get into the asset class which you do not know. Like cryptocurrency is the best example, because for me the cryptocurrency is like a maya. So I don't know why it goes up, why it comes down, because there is no underlying economic value. But whereas all others, there is an underlying economic value. So invest in what makes sense.
Right. So since you talked about blockchain, I was gradually going to come at cryptocurrency also, because in recently one of my international programs on obviously finance, I learned a lot about investing, then one aspect of green finance, and then it also came to cryptocurrency, where I'm not really that knowledgeable about cryptocurrency, but I was told there are 30,000 cryptocurrencies or more.
Yeah,
Right.
yeah.
But over time, like you said, you call cryptocurrency Maya, and I really buy that fact with you. I
Yeah.
stand there, because I still don't understand how is cryptocurrency as safe as going with something like a fixed asset of
Yeah.
land, property,
Yeah.
or equipment for
Yeah.
that matter of fact.
It is not. I mean, it is just the, there is no underlying economic value. See, you take any other asset class, be it land, there is an underlying economic value.
Absolutely.
Be it shares of any company, there is an underlying economic value created by the founders of that organization, right? So there is an underlying economic value for every asset class.
Right.
Whereas in the cryptocurrency, there's absolutely no sense why the price goes up, why the price comes down. There's absolutely no sense. So there's no underlying economic value.
So it's
So I
unpredictable.
always stay away from those kind of asset class. And it's not even an asset class, I would say. Yeah.
Okay. So it's a bit unpredictable, you could say. The
Yeah,
cryptocurrency.
it is speculating something which is not existing.
Absolutely.
Yeah.
Sir, on that note, since you talked about crypto and the valuation that crypto has up and down in the dark phase of crypto, what do you think is a fake indicator of one's wealth?
Fake indicator of one's wealth. See, anything which is overly projected is a fake indicator. Okay, be it our personal side, be it on the organization, anything which is over projected but less in content
Absolutely.
is a fake indicator. Okay, it could be with our own individuals. Just because someone is dressed up well, someone is coming in and the fabulous or the classic royal cars, doesn't mean that they're happy or they are content, right? So
Yeah.
so the indicator which projects the substance and the form which matches both together is the real indicator. Anything which does not match with the substance and the form is definitely a fake indicator.
So, will it be right to say that a person's net worth is a fake indicator of their wealth?
No, not necessary. So the person's net worth is, someone's net worth is very high, thousands of crores, and someone's net worth is as less as probably 10 lakhs. If both of them are happy, it doesn't mean that, there's a fake indicator there, right? The fake indicator is again a situational based. What are you looking at? Is it you're looking at the organization,
Right.
or you're looking at a personal or as a person? If it is an organization, the organization might have, I've worked with 5 companies, okay, and I know in the worst of the times, we as a company did not want to showcase that we are going through challenges to the external
All
world.
right.
So we continue to maintain the status of everything in what we do. So that is a fake indicator, right? So because the substance and form is mismatch. So as I said, it is situational. Again, it depends on what objective you're looking at.
Right. So, what I understand is it's just not about the inflows, outflows, or the positive cash flow in their personal life. It's also a lot of factors like how happy they are with their network that's projected and in their daily life.
Absolutely.
Perfect, sir.
Yeah.
So you did mention that like each firm faces challenges, and it's also true for industries, right? There are many economic challenges that are being faced even in the post-COVID era. So in the industry that your company focuses on, which is healthcare, what are some key economic challenges or opportunities that you anticipate in the coming years, and how do you plan? How are you planning or preparing for them?
Excellent question. See, before I answer that question, let me give a little bit introduction about my company. Okay, so Emids is a healthcare service provider, IT service provider, and only in the US economy and US geography. Sorry, and if you have to look at the entire ecosystem of the healthcare in US, so there is a hospitals, which is basically the service providers,
Right.
and there is a payers, which is called the insurance companies, and there are life science companies, and there are medtech companies, and there are pharma companies, and on top of all of this, there are tech companies who are providing the tech solutions to each of these verticals. Okay.
All right.
Now we Emids provide services, IT services to the entire gamut of this section, excluding the medtech alone, which we are intending to get there. So this is the entire ecosystem of the healthcare. Now the US market in the current year is going through significant challenges because of the high inflation and labor challenges and economic slowdown. So because of this, what is happening is that while the companies are deferring their budget, deferring their discretionary spend, like the technology is something sometimes necessitated, sometimes discretionary. Why I say discretionary is maybe futuristic. Okay, so in the times of where there is a economic slowdown, what happens is that all the companies try to conserve the cash. How do they conserve the cash? They do the budgetary cuts. They defer the spend,
so their outflows gradually
so that
decrease.
their outflow is coming down, and they have the sufficient cash flow in the balance sheet.
Right.
And then when the things improve, then they come back to their spending requirements. Okay, so so this is the same thing which is happening right now in the US economy. All the companies what we talked about in different verticals are deferring their spend, having the budgetary cuts, and cutting down their capex requirements, those things. Okay, so these are the challenges we do have, because we are in the IT space, and if we have to provide service, unless those companies spend, we will not be able to grow our business.
All right.
So that's a big challenge what we have. However, on a flip side, it's the same. I consider this as an opportunity as well, because when the companies are looking at cutting down their budgets, we as a tech company, where we can bring in a lot of digital transformation, can help the companies to identify the challenges what they're facing, to plug the leakages on the revenue side, and bring down the cost and improve the overall efficiency. So this is what we'll be able to achieve with our decades of experience in the healthcare environment. So what we need to do is that we have to consciously, and which we are doing, invest in the technology by looking at the Gen AI kind of a products or RPA kind of solutions what we can offer to the companies, etc. And also wherever the companies have necessary spend, not the discretionary spend, we focus on that area of the opportunities and create a value based solution. Okay, so when I say value based solution, when you have a pricing with a customer, create a model where you can demonstrate there is a skin in the game, you as a vendor, and don't act as a vendor, but be as a partner to the organization.
Absolutely.
And then create a value based pricing, which means in the value based pricing there could be a short term cash flow challenges for our companies, which I think we should be able to manage, because over a period of time we have conserved the cash, we focused on the balance sheet and improved our cash flows. Okay, and the other strength what we have is that we have huge offshore delivery model, which means the customer when the customer outsource the work to any company in US versus the companies like Emids, they probably pay 1/4 of the price what they're paying to the other US
Wow.
company. So this is the offshore cost arbitrage which we are leveraging, and this is the time where we have to demonstrate more and more of this and tap that particular space from
Space
the
for
customer.
them. Right.
All right.
So you talked about tapping the space, right?
Mhm.
On that note, one common question that often comes to my mind is, what are the insights that you could provide us on the relationship and the equation that is there between economic growth and corporate financial performance, but in context to the sustainable practices, giving back to the environment, giving back to the society?
Right, right. See, be it an organization or an individual or a family, okay, we are living in a society.
Right.
Yeah.
We cannot operate in isolation. Okay, what does this mean is that every penny what we earn, some percentage of that in some form or the fashion, we have to give it back to the society. Now giving back to the society, it could be to the needy or to the protection of the environment. Okay, and there's a lot talked about the environment protection. It could be wildlife, or it could be the natural resources, or it could be the trees or nature, whatever, right?
Right.
So as an organization, we strongly believe in giving back to the society, and we do constantly focus on that area, and we have done quite a bit on the sustainability side, and it also helps and the way we do is not just identify one particular cause and then contribute. So it is basically making it a what do you call, a all inclusive momentum, right, where we involve our employees, where we involve our board of directors, where we involve the society, so by which everyone feels part of it and inclusive, and that's where the bonding gets created in the organization because of this cause. So it achieves two objectives. One is we are able to work on the sustainability of the environment. Two, also creates the bonding to the organization, and when it creates the bonding, the results are fabulous. So the people or the employees, what they deliver
Right.
is fabulous, right? So, and overall the organization grows, and then the profitability, and so the cash flows
So
and the valuation.
what's interesting out of what you said is that you can achieve the social goals also, whereas you can work on the company's profit also.
Absolutely, you have to interlock both of them at the right space, right time.
So you're achieving the same target but with two arrows,
Exactly.
which is very interesting, right?
So one thing that Emids did recently, last month, was that they released an AI, ePulse AI, which is a generative AI platform for the healthcare industry. So, in a world where AI is touted as the future for many generations to come, what impact will this AI have on the industry's digital transformation?
Yeah, so good question. So we if you look at our spread of services to our customers, they are probably 18 to 20 different offerings what we have, right from product engineering to the new age solutions on the AI ML cloud based and low code, no code, multiple things. So we felt when there is the future, as you rightly said, is going to be Gen AI, and we started investing and evaluating how well we can adopt this Gen AI into our offerings. So as I rightly said, as I said, in the previous question, we as a company need to invest in the difficult times, in the new age technologies where we can provide services to our customers at a low cost, right? So in pursuit of that, as a result of that pursuit, we got this Gen AI, this ePulse tool, which is based on Gen AI, and this is a tool which basically works as a product development platform,
Okay.
which helps the developers to improve the efficiency and to improve the speed and reduce the errors and reduce the overall cost and also reduce the time taken to the delivery and go to market. Okay, and since we are in the industry of healthcare, it is extremely important and paramount that any innovation in healthcare has to come to the market at a faster pace to have a meaningful results of that.
And I
right?
believe it has to go through a lot of parameters also.
Exactly.
Because when it comes to healthcare, it might be at a small level, but each life matters, as we say.
Exactly. So in the age of you're bringing this technology into the healthcare, it helps a lot. And we are seeing that the technology in the healthcare in terms of diagnostic accuracy or in terms of robotic surgeries or in terms of telemedicine, bunch of things, the list is endless. So the technology adoption in healthcare is immense. And the results are very high. So it is imperative that we are not late in the race, and hence we introduced this ePulse tool. And I think we slowly started seeing the results. It's evolving. The tool is evolving, and I'm sure with lot of technology background, we have the amazing talent pool. With that, we will be able to bring the amazing product to the market.
Right. So just one thing, right? What does the AI really focus on, in the healthcare industry? It's the industry itself is broad. So does the AI focus on certain aspects?
As I said, I think the technology, basically the artificial intelligence or machine learning, it basically gives the level of accuracy it is required, right? So in the diagnostic results, it gives an amazing accuracy. Even in the predictive analysis, it gives an amazing results. I think 2 days back I was looking at one particular diagnostic center. I forgot the name. I think it starts with N. So this company is already using AI and ML for all the tests what they conduct. Okay, and apparently some in my CFO circle, 2 people came forward and they gave a testimony of this particular diagnostic, where they say that the test what they conducted in elsewhere in the traditional diagnostic center versus here, something for the parents which was not identified in the diagnosed or identified in the traditional diagnostic center, whereas they were able to identify in this center because they were using AI and ML. Right. So that's the amazing thing. So like this, there are many things which are with the chatbot.
Absolutely.
Especially in countries like US, where the cost of hospitality or the medicine or the medical treatment is so expensive. Some of the low kind of diseases or low kind of challenges, health challenges, can be addressed by machines. They need not have the doctors. Like in US, you can't go and buy a simple the simple tablet. It could be a headache tablet or it could be a small fever tablet.
Absolutely.
Dolo 650 without a doctor's prescription.
Yes.
Yeah.
Completely.
So in that situation, and getting the doctor's appointment is not so easy. It's extremely difficult. So having a artificial intelligence, a chatbot, it can help with the right. You give the right responses and it asks the right questions, and it gives the right results as to which kind of medicine to be used. And people are taking that prescription to the pharmacy and able to get the medicine. Now imagine the cost is come down and the dependency on the doctors have come down. So it's going to be a big transformative or revolutionary this AI which is going to bring in the healthcare industry.
So sir, the same US example I'd applied for Japan. I have personally stayed in Japan. Whenever I used to get unwell in Japan, it used to be a long doctor's line that we go through, right? And without doctors' prescription, even getting the smallest of tablets, even something like a Bicosol, is very hard at a general store, right?
Yeah.
Right. And there are common places where it's one pharmacy for one area, unlike what's done in India, because US and Japan, I believe, really values the life, right? And the procedure of the doctorate there is fairly different. But my question here would be that in ePulse AI, we look at the advantages that, yeah, it is decreasing the cost, right? There is less waiting time and it is reachable to everyone, the biggest point out of all. But on the same hand, it is AI, right? So whenever the word AI comes, we think of two things, America and India and OpenAI, right? So when I'm talking about OpenAI, nowadays there are a lot of disadvantages of OpenAI, right? That people really want to not do their work efficiently and probably use AI for everything. The same way when I contemplate OpenAI as compared to the AI in healthcare sector, do you see any disadvantage?
See, all of these technology solutions, they are ultimately the tools,
Yes.
okay, for a real human being. Okay, now the days we have come from the stone age and we have surpassed with multiple ages, and now we are in the era of technology, right? Now when people those days, if they have to cut a tree, they were using the manual axe to cut it, and it used to take a lot of amount of time.
Yeah.
Yeah.
And when the machine came, it probably take 10 minutes to cut such a massive tree, right?
Right.
It's that machine is what? It's a tool, it's a technology, right? But who is using it? Who is the creator of that? It's a human being who created, and human being is the one who is using, right? So I'll answer your question in two parts. One is the AIs cannot replace the humans because of this
Absolutely.
nature, what I've just said. And the second is that you rightly said that OpenAI, the biggest challenge is the confidentiality, lack of confidentiality.
Absolutely.
And in the healthcare sector, especially in US, which is highly regulated and extremely confidentiality need to be maintained, right? So we use this ePulse platform only in the areas where it is of generic nature and nothing to do any of the health records of any individual. So it is basically to create a product or develop a solution to a customer. We use this platform to speed up the process.
Okay.
Yeah, but we do give and train our employees in terms of confidentiality, how it can be used, because there's a high chance of misuse. So we give all of that training to our employees to make sure that confidentiality is maintained. Yeah.
All right.
So while my experience at Grow, I was under the asset management segment, right? Under the AMC segment. There, I also on their private channels at Guru and Zarodha, I used to get disclaimers such as kindly do not use confidential information inside ChatGPT to take out information, because as per the latest updates, there 8 to 9% of info is going to ChatGPT, right? So we completely understand that aspect, and it's a great learning for us that not to depend on AI, because at the end of the day, these are just tools. Work has to be done by the humans.
Yes, exactly.
So on a personal note, after research, we know that you have a very diverse educational background, right? You have been from accounting to finance to AMP from IIM Bangalore, one of the most prestigious things, right? How has the mix of these three things, accounting, finance, and AMP, contributed to your career in finance? Do you think doing accounting would be as valuable as doing all three together? Would it be the same, or it has made a change after you have done finance or AMP?
Okay. I think it's an excellent question, especially for when you're doing this particular project for as part of your academic, right? And the reason why I say that, how important these educations are relevant to the corporate world. Okay?
Right.
Now, let me tell you, in my case, I'm the finance leader, and when I started the finance 22 years back,
Yeah.
I remember we had manual transactions recorded in a books. Okay.
Yeah.
The accounting was at that level.
Absolutely.
Now, those days, you announce that you have completed accounting, or you have closed your books of accounts on a monthly basis or quarterly basis. You started taking significant pride of it. And one of the other biggest event for a finance professional was that once the financial year end is closed, you prepare the annual report and publish to the shareholders. The finance guys used to feel a lot of proud and pride, yes, we have completed the annual
Right.
report.
Yeah.
Absolutely.
But today, if you look at, finance has undergone a significant transformation. Okay, today the finance professionals focus more on the business and value creations and less of accounting. So the accounting, the month closure, annual report, those are all taken a back seat. And we as a finance professional focus more and more into the business, where we partner with various business stakeholders in the organization,
Right.
and we create value to the shareholders, the finance professional, and we work as a co-pilot to the CEO. Okay, so when such a transformation has taken place in the industry,
Yeah.
it is important for an individual also to go through that transformation. And the transformation cannot happen overnight, and it happens over a period of time, and it can happen with multiple known and unknown, conscious and unconscious actions. Okay, the conscious actions are getting into some kind of a learning, some kind of a certification, or some kind of a going through some sort of a leadership program, multiple things.
Multiple
So
things.
this IIM is one which has provided this tool for us, especially for me, where I was able to partner with the business
Right.
and understand from their perspective, and and take the decisions, or the bring the ideas, strategic ideas,
Right.
which is not only from the number perspective but also from the other elements perspective. Like, to give an example, I work with my HR teams a lot.
Okay.
Right.
And if you look at the HR and finance are on the two extremes. Finance only looks at the numbers but no emotions, whereas HR looks at only the emotions
And no
but
numbers.
no numbers.
Yeah.
Yeah.
Right? So these are two different extremes. Now, in the past, it used to be so difficult for me to collaborate with this both, collaborate with the HR, because it was not aligning. The ideas were not
Absolutely.
aligning.
Right.
But the course like this IIM has helped me a lot to understand from the HR angle, and which has an inherent a hidden benefit for the organization, where you bring the emotional element in the organization, which help the employees to improve their morale and deliver the better results, and overall improve the profitability of the company, right? So these kind of courses has helped me on those aspects, and I mean, absolutely really helpful. It is useful.
No, sir, I mean, this is a source of inspiration for us also, that now finance is just not about numbers,
Yeah.
but it is about how applying and adding value back through the numbers.
Yes. True.
So you had mentioned earlier that this is the era of technology, right? Where AI is become the future, how people are investing more into technology, and in that also there are many startups, right, which also focus on technology. So with these startups, what are some key considerations when they are scaling their operations, and how will they be able to ensure that they are able to achieve significant economic growth?
Okay. See, personally, I have not worked in the startup, but I can tell you based on my experience and based on my observation. Okay.
Right.
Now, the traditionally, and this is one of the case study which we have talked in the IIM Bangalore also. Traditionally, if we have to look at what value you give to an organization, okay, we all learnt in the finance that a company which is making profit, and that profit is what will be distributed to the shareholders, either in the form of value creation or in the form of a dividend, or whichever
Right.
way. Okay.
Absolutely.
Now, that was the traditional, and the any company, it has to be valued. It was based on the uh, profit after tax. Now, over a period of time, the entire concept of valuation has taken its
Turn.
significant turn, and I don't know it's called as a transformation or no transformation, but it's a significant turn.
Yeah.
And they are valued, the companies are valued based on number of transactions, okay, based on, from the profit after tax, it has gone to the EBITDA, where the companies are valued based on the EBITDA. Now from the EBITDA, now it has gone to the gross margin level, where the companies are valued based on the gross margin. Now from the gross margin, take out all the financials, we just focus on the business statistics based on how many customers, how many visits are happening in this website. Based on that, the companies are valued.
Absolutely.
Now, is that a sustainable model? What happens is that, when the investors invest, obviously they would like to see the returns of 2x, 3x, 4x, 5x, right?
Absolutely.
When they invest, any investor, right? We talked about saving versus investment. So if an investor is looking at an investment, how do they get the returns? If the company is business statistics are doing well, but financially, if they're not doing well, with high overhead cost and high advertisement cost and very low gross margin, the company is not sustainable. So I strongly feel that while this business KPIs or the statistics are relevant and important, at the same time financials are also extremely important.
All right.
So any startup which is creating a model, I mean, they have to focus on a model which is long-term sustainable, not just the short-term. And the model should be such that eventually it should create profitability and it is self-sufficient.
Absolutely.
At every turn, be it 6 months or 1 year, you go to the investor and asking for the funding to run the operations. This is exactly what I said, the long-term funds used for short-term.
Yes.
Yeah. So that's where the disaster starts, right? So a business has to create a model which is self-sufficient, and which means they have to start making profits. And two, they have to invest on the technology. I've seen so many company startups, they were doing well, but because they did not invest in the technology, internal technology, what they have provided to the customer, the technology is good, but internal controls, they have lapsed and the companies have shut. Okay. So also focus on improving the internal governance by bringing lots of controls, processes, and overall governance, which is very important. And next, fourth is the keep accepting the feedbacks, and based on that, take the corrective action. If you are in a denial mode, then I think you are living in a fairy tale world, right? So keep accepting the feedback and take corrective actions. And fifth, identify who your customers, and no matter what, even if the situation is good or bad, even if you've done a fabulous job in your offerings or delivery, even if you've done a bad job, please go and meet them, please, because your existence is because of them.
Yeah.
So no matter what they are, how they are, whether they react, no reaction, just be with the customers and keep taking the constant feedbacks and improvising yourself. And the last but not the least, the risk factors. As a startup, one has to, not just startup, any business for that matter, keep identifying the risk which can address, which can disrupt the business, and identify those risks and take corrective measures at the proactively.
So you talked about a very beautiful thing in the most concise manner possible. That is that make the model long term. If I'm a founder and I want to earn money in short term, that's awesome. But if I want my company to live under my name or build something that is making money and giving back to the society, as you had mentioned earlier, we need to make something that is big, that is powerful, and solves an idea or a purpose.
Absolutely.
So you talked about the basic consideration that startups need, and we understand that in the most delightful format possible. But if I want to procure a startup's supply chain efficiently, what are the steps that I take? And by that I mean, for example, the common understanding as teenagers on business management we have is the supply chain runs in a format where it is from the producer gradually moving to the wholesaler, then the retailer, then the primary consumer, then the secondary and the tertiary, obviously. As per you and your understanding in finance, what are the steps that we should take to efficiently manage the supply chain such that it is reaching the audience effectively, the primary and the second audience effectively?
Excellent. Yeah, so there are a couple of aspects. If this is a company, which is high into managing the inventory, okay, and that's why we are talking of the supply chain and the vendor management, right?
Yeah.
So it is extremely important that inventory is managed at the utmost minimal level.
Absolutely.
And I hear, because you worked, you lived in Japan, so there is a concept in Japan, just in time.
Absolutely.
Right? So the procurement happens just in time. Why? Because if you invest in the in building the inventory, you're unnecessarily blocking your funds for any kind of capex requirements or the expansion, right? So how do you achieve this just in time model? So one is that you have to have a partner, which is a vendor, who you can trust, and when I say trust, the way the pricing is competitive and where the quality of goods or services is not compromised. So this trust you need to build, or the vendor needs to build, which is a long-term process, and it's a process in itself. Okay.
Right.
And we as a company have to be, I'm sorry to use this word, have to be shameless in negotiating and negotiate to the last decimal, because penny saved is penny earned. So negotiate to the last decimal and create a model, or create a the distribution such that where the cost of transportation is at very less price, and it also reaches to the last mile connectivity. And that supply chain, again, you need to partner with the right set of logistics company where they can provide excellent services with the low cost.
Yeah.
So these are some of the tips which I would follow to make sure maintain the low inventory and supply chain disruption does not happen, which we have seen during COVID, where huge dependencies on the different countries, and that's where the supply chain disruption happened and all the consumable prices have gone up significantly. And that is why our Honorable Prime Minister keeps talking of Atmanirbharan, which is self-sufficient, so that even in the times of COVID, we don't need to depend on other countries, and we are self-sufficient, we are able to supply or distribute by ourselves.
Alright. So earlier we had talked about how Emids released their product, the AI, right? ePulse AI. And usually, of course, there is a certain price strategy that is there, right, when you're selling a product. So what factors are considered when you're setting a price strategy for for your own products?
Very good. So again, here I'll take a step back, and for the interest or for the benefit of the audience, I'll talk a little bit about what kind of services Emids offer. So the Emids offer the IT services. We do not have a product. We offer the services. Okay. And when you offer the services, most of the time, our pricing is based on the resources headcount. In any kind of IT service industry you look at, where the pricing is based on how many headcounts you are supplying to the customer.
Absolutely.
Okay, is it 5 or 10? Based on that, the pricing depends.
Yeah.
Now, this is again a traditional way of looking at. Okay. Now, this does not create a long-term sustainability, or it does not demonstrate the maturity in our delivery operations.
Okay.
So in order to showcase the maturity in our delivery operations, we got to move from the traditional pricing to a value-based pricing. Okay. When I say value-based pricing, it could be gain share model, a revenue share model, or it could be fixed price engagement where there's skin in the game. Okay.
Right.
Now, in the entire pricing strategy, the first thing I ask my sales guys is that, have you identified, have you understood what the customer want? Okay, and what kind of solution does the customer want? Is it the customer just want the people or just want that
Right.
solution? Most of the times what happens is that we focus on what we can deliver rather than understanding what customer wants.
Okay.
Right.
Yes.
So understanding what customer wants and directly shifting your gaze in your discussion on the solutioning, what solution you can bring to the problem the customer is facing, can take the discussion to very, very mature level. Okay. So the first, as I said, is what customer wants. The second thing what you need to understand from them is what the budgetary constraints they have. Do they have any budgetary constraints, or is there any limit to their budget spend? Accordingly, you can structure a product, right? You can promise to give a Benz, but if the budgetary constraints are that we can
Yeah.
give only Maruti Alto, then you can't definitely deliver. Then you will start bleeding.
Again,
right?
there's a gap
Yeah.
between need and want.
Exactly. So you need to understand the customer's budgetary requirements, and the third, as I said, what kind of solution the customer wants, and five, what timelines the customers are looking. So depending on the timelines, we can decide how many people we need to deploy to this project. Is it 5 people, 10 people, 100 people? Depending on that, we can decide. So these are some of the fundamentals, questions we ask to our sales folks, or sometimes we get into a direct call with the customer to understand all of this, and then we structure the right pricing. Okay, and as I said, again, it may be repetitive, sorry, but we focus on value-based pricing than the traditional pricing, which demonstrates there's a skin in the game and there's a win-win solution to both of them. Right?
All right.
Sir, while you were saying, one big concern that was constantly hitting me was that since you were the finance controller, I'd say, right? And especially in the healthcare sector, there's a lot of international taxation and transfer pricing that happens, which would also generate compliance issue for you. So more than a question, I would want your reaction on this. That how do you deal with the highly regulated sector like healthcare and the compliance issue which might come up every second day? Does it frustrate you or the employees, for that matter of fact, the every second compliance issue that might come up?
Okay. So your question has two parts. One is the compliance for the company, and one is compliance in the MSA compliance. When I say MSA, the customer contractual compliance with the customer, because we are in the healthcare sector, right?
Absolutely.
So in the former case, where it is the regulatory compliance for the company. So just to give you perspective, Emids is present in 8 different geographies, and it is India, US, Philippines, Eastern Europe, Mexico, Canada. And some of them are socialist countries, some of them are capitalist countries. In some countries, the regulatory authorities are extremely notorious. In some states, in some countries, the regulatory are very proactive. So the compliance challenges are multifold.
Perfect.
And again, to give you a perspective, in a year, we file close to 500 plus returns.
Okay.
Which includes your monthly filing, quarterly filing, or annual filing. It could be sales tax, or it could be sales and use tax, or it could be federal tax, state tax, or income tax, or transfer pricing, or GST, you name anything. Okay. So there are about 500 plus compliances which we make sure. Now, when we got to know, as we kept expanding to the newer geographies, we kept focusing and we decided that we as a company give highest priority to the following the laws of the land, right? And we cannot have a situation of non-compliance, and we do not tolerate. We have zero tolerance to the non-compliances, and hence we constantly invested in people where creating the knowledge for the people, in providing the wealth of information to our employees, where they can manage the compliances periodically. Okay, and two, we have invested in technology to make sure we have the right tracking mechanism of all these compliances in each of the country which is required,
Okay.
by giving the appropriate alerts or notifications, and providing a proper dashboards to all the level, from the people who are actually doing the transaction till the CEO level or the board level. It gives dashboards to what the level of compliances we
Absolutely,
are
sir.
following, right?
Right.
And third, we have also invested in constantly on the processes, because the something which is as simple as deductible expenses in one country may not be the same in the other country.
Yeah.
And within US, I'll tell you, we operate in 46 states out of 50 states.
Wow. That's
And
huge.
and in each state, the state taxes are completely different. Something which is a deductible expenses in federal tax may not be deductible expense in one particular state, and the other state may look at that expenses differently. Now, how do, when you're having the transaction, voluminous transaction, in a month I can tell you my GL runs to 10,000 line items of so many transactions, expenses, payroll, everything. How do I track it? How do I make sure these expenses are disallowed, or appropriate tax filings have been done, etc.? It's because we have invested in the technology to give the right set of information for the right state or the right geographical needs. Okay, and the fourth, what we have done is that we have also partnered with the respective local subject matter experts, because just to give you an example, we think GST in India is complex. However, I can tell you, in the last 1 year in US alone, there were close to 300,000 amendments in sales and use tax alone.
Wow.
300,000 amendments. Now, how do one keep track of that? Right?
Right.
It's
Yeah.
humanly not possible. So we do have the experts in each of the local consultants in the local geography who are subject matter experts. So we understand where they keep giving the information, and when they keep supporting us, advising us, etc. So we have basically, in summary, basically we have the proactive reviews and the discussions which happens regularly, and monitoring happens regularly, and also keep thinking how, on top of all of this, we also keep thinking how we can save the tax in a right manner. And touch wood, by making all these efforts, so far we have not been having any major challenges on the compliance area. So thanks to my team and the technology and my partners.
So
Alright.
to conclude, I understand one big aspect of what your explanation was, that one, your investment in technology is playing a key role,
Yeah,
right?
technology and the people, because I personally feel technology can give AI, which is artificial intelligence, and investing in people can give RI, which is real
Wow.
intelligence.
Noble, yes, sir.
Yeah.
Alright.
Right. And moreover, investing in technology is also increasing your aggregate demand to extent, right?
Yeah.
So technology is one aspect and the people are the other.
Absolutely.
So I've got my answer that there is a lot of compliance issue. I cannot say that it's not a compliance issue, but it is all about how you deal with it.
Exactly. There are compliances. It's not an issue. There are compliances. One need to figure out how it can be managed. Yeah.
Absolutely.
Yeah.
Alright. So earlier, when you were talking about, like, based on the previous question, you had mentioned that the company operates in multiple countries. What has been told has been about 6 countries, if I'm not wrong.
8 countries. Yeah.
8 countries. Okay. So how do you manage the financial operations, treasury, and banking across all these, like, different regions, right? And what considerations are involved when about in the international financial management?
Yeah, excellent. So, just to give you a perspective, in our case, the finance is centralized operations in India. Okay.
All right.
For all the global operations, we have centralized here, and we have each one touch point in each of these geographies to make sure the local needs and the coordination is happening. And when your operations are centralized in one particular geography, when your presence is in 8+ geographies, what can bring challenges is that the different languages, the different culture, and the different time zones, all this can bring significant challenges and the complexities. So the first, just to give you additional color on what I'm talking about, is that we have totally 17 different legal entities.
17
Okay. Legal entities in 8 different geographies, and we have 13 plus systems of both our own legacy and the acquired systems. When I say systems, it could be accounting system, or it could be timesheet system, like this, multiple. So we have totally 13 plus. Now this is a complexity we are operating. Okay. Now what is important is that, and how we were able to achieve what we have achieved, is that though the operations are centralized, however, we have empowered the respective stakeholders with proper delegation of authority. Okay.
Alright.
That's one aspect. I'll talk about it more. The second element, what we have done is, we are, as I said, there are cultural differences, time zone differences. So the important big challenge which I had to train my team was that we are culturally different, but we are united with an organization.
Yes.
Right?
Yeah.
With a purpose.
Yeah, with a purpose. So that you start appreciating the regional cultural differences was the first and important aspect which we had to drive my team and train on that. Okay. And the third is that we have identified the partners who can provide these services for each of these geographies. Like you talked about the banking.
Yeah.
In the past, we used to operate, I would say, closely about 45 different banks.
Wow.
In all this world.
So that's a lot of management out there.
Lot of manual administration. It's a unnecessary waste of time. And it also happened where I was acquiring one company in India, where the funds had to come from one geography to the other geography. The just movement of funds, the funds have come to one geography to other geography to use these proceeds for the acquisition. But there was some other documentation which is required as part of the regulatory needs, and that has delayed by 1 month. So my whole acquisition is delayed. And that kind of, why I gave this example is that these are these, small issues can create a big challenges. Okay. So what I decided a couple of years back is that to have one bank which can provide service to all the geographies.
I see.
So that's when we have transitioned all our operations to one single bank, a global bank like HSBC, who has the presence in all of the geographies, where I have one platform and I can see how the funds are getting moved from one geography to the other geography, right? So that was a big decision which we had to take. And other important thing is, which I want to tell, is that we finance in our organization operate with 3 verticals. One vertical is we strongly believe this is an institution.
Right.
The finance is an institution
which
can bring transparency to all the stakeholders.
Absolutely.
And at Emids, what we speak to the board, what we speak to the auditors, what we speak to the government agencies, or what we speak to the investors, it's all the same. We don't mince words, so we are absolutely transparent with all the stakeholders.
Okay.
So this is one pillar which we operate. And the second pillar which we operate, which we strongly believe for this institution, is an unbiased. So you asked me a question in the earlier that what is a bad advice you have ever received, right?
Yeah.
So irrespective of whatever advice, irrespective of whomsoever is giving the advice, we are unbiased with our actions.
Yeah.
No matter who this person is, junior, senior, doesn't matter.
Okay.
We are unbiased with our actions. as a finance.
So that sets the workforce apart.
Exactly, because we are an independent and we are unbiased institution, no matter who it is. Okay. And the third pillar for us is that we create value to the shareholders.
Right.
Yeah.
How do we create value to the shareholders? By identifying the inefficiencies in the operations, by partnering with the business, by creating a value-based pricing to our customers, and improving the the sales or the revenue for the company, and improve the profitability and the margins, and overall create the value to the shareholders. So these are the three pillars with we operate.
Okay.
And there are few more ethos on which I have inculcated to my team to follow this approach on every action what they do on a day in day out basis, and that has resulted managing the global operations centralized in India.
Yeah.
And what are those ethoses? This is a word I have coined it. It's called PIECES, pieces. Okay. P is proactive communication with my with all the stakeholders, where
Okay.
generally finance lacks communication. So generally finance team are not that proactive in communicating.
Yeah.
So we have to bring that mindset that very clear and compelling communication is required. Okay.
Because
So-
we say the numbers speak. And
Exactly.
we also need to speak with the numbers. otherwise-
Exactly.
Yeah.
And most importantly, you rightly said, that traditionally the finance guys were talking with the numbers. So those days have gone. Now we have to talk with the story. So the
Absolutely.
storytelling element is very important. So that is called, the proactive communication. The second is PIE. Okay, PIECS. I is, it's basically, sorry, I missed the I part. C is collaboration, where we cannot operate individually in the organization. We have to
Okay.
collaborate with every stakeholder and bring the common purpose for the common objectives of the organization. E is efficiency, basically empowerment and efficiency.
Right.
Authority and responsibility are two sides of the coin. You cannot have only the responsibility but not the authority. So you need
Absolutely.
to empower the team to deliver the results. Okay. Then S is the sense of urgency. Okay. In finance, decision delayed and gone. So the timing is very important. The real time information is required, and the real time decision making is important. So there, one of the aspect what we have done is, earlier data was centralized. Now we have democratized the data. So which means the data is available with everyone.
Right.
So that helps them to take the timely decisions. So that creates the sense of urgency. Okay. And the last, I think I mentioned about I, which I missed it, which is individual thought leadership.
Okay.
So I strongly believe no idea is a bad idea. So every idea is important. Everyone who is giving the idea in the organization is important. So I encourage that individual thought leadership. So these are the ethos in which we operate, and as a result, we are able to manage the global operations.
So these are like core values that the company follows.
That's right.
So, sir, I learned, I think, so a lot about collaboration.
Yeah.
And the word you have coined pieces. So we'll remember this.
Sure.
For long to go, because
Sure.
futuristically, when we are future entrepreneurs or working in the finance sector, right? So these basic norms help us a lot. And I would say that more than norms, these are basic set ethics that each company should follow in order to make a sustainable living in the sector.
Absolutely.
So, in your role, right, in the company, you have been involved in risk assessment and management. So, how do you assess and mitigate business risks in the healthcare technology sector? And what role does insurance play, like, in this process here?
Oh, very good question. I'm happy you asked that question, because I think we talked about this risk management even in the startup business, startup world, right? So many a times the companies in the race, in the race of bringing the growth, they miss out on doing this risk assessment. Okay.
Right.
Yeah.
But risk is, we are all living in the VUCA world, right?
Yeah.
Yeah.
So
Absolutely.
yeah, it is so important this risk assessment is done proactively, and this process is essentially involves identification of the risk, and then creating a plan, how do you mitigate the risk, and then monitoring it, and then reporting it, and then assessing it. So it's a cycle. Okay, it's not a one time activity which is to be done. It's a cycle which organization needs to do for a business continuity plan on a period over a period of time. Okay. And there are bunch of risk which organization faces, and before I talk about each of the risk organization faces, I just want to give one example that yesterday I was in a CFO summit where one of the CFO was saying about this, where in the Wimbledon, right? So in the Wimbledon there is it's organized by an organization, right? One particular institution. So that CFO has been consistently taking an insurance for no show, okay, which means that for whatever reason the Wimbledon cannot be conducted. So then there is an insurance which pays out to the which pays out to the company.
It's new.
So this person has been taking this insurance for a period of 19 years.
Okay.
And they have shelled close to 19 to 20 million dollars. Okay?
Wow. Okay,
Over
that's truly
Right.
something big.
Yeah, over a period of 19 years. But during COVID, because they could not conduct the Wimbledon, the insurance company paid 100 million to this institute. So they spent 19 million and they got 100 million. So why this happened? Because someone who thought about it, yes, there is a business continuity which is required, and this is a risk of not having the the event. So I need to go for an insurance. So this is the risk assessment. So you got to be visionary, you got to be thinking about futuristic on the risk management. Now in my organization there are a bunch of risk which I have which we have followed. One is the geopolitical risk. We are couple of years back we were just present only in India and US. Now we are extended to 8 different geographies. Now what are the challenges? The biggest risk is the geopolitics, right?
Yeah.
So if we've been seeing the countries are going for a war, and if your organization is present in one particular country, then it becomes a big risk. You will not be able to move the funds, or you will not be able to move the people. It's a big risk, right? So one is the geopolitical risk which you need to assess, which is again a constant thing, and based on that one has to take a decision. The second is the interest rate risk, where we have seen US being all-time high in their interest rates. So going to like 500 plus basis points, because of this, what has happened, my cost of borrowing has doubled significantly in US. So this interest rate risk, 2 years back, if I have done the hedge, in fact I did discuss with my private equity to figure out how we can hedge this interest. Had we taken an action, I would have saved significant cost. So interest rate risk is one other element.
So leakage and injection in such a situation are not proportional to each other.
Sorry?
So in such a situation where there's a war happening, right?
Yeah.
Your cost of borrowing, as you mentioned, are increasing.
Yeah.
Due to which, rather you have to spend money on your employees, for that matter of fact, or on that infrastructure, or on that economic condition in order to survive there.
Yes, your overall cash flows are coming down because you're paying a double high interest rates, and which is delaying your expansion plans. It's again, it has ripple and effect on every aspect. So this interest rate is, risk is, we tend to miss out, and again that's very important. And the third is the liquidity risk. Now liquidity risk is, we talked about, the US is going through major challenges, economic slowdown, and which is why companies are slowing down their spending needs, right? Why? Because they have very less liquidity risk.
Right.
And one simple measure I follow here is that if a company, whatever the company's cash flow in the balance sheet, if there is no business, zero business, how long the company can sustain with this cash flow. So
Alright.
as a thumb rule, I keep telling my management that we should have the cash which is equal to 6 months of our cost. So which means even if you have zero business in next 6 months, but the company is sustaining by paying salaries to the employees and paying the basic expenses. So that's a liquidity risk. And third, fourth, when you're operating in multiple geographies, the biggest risk you go through is the foreign exchange risk. Because when you move the funds from one country to other country, there's a huge foreign exchange risk.
Yeah.
Like today the dollar rupee is at 82.3.
Yeah.
If this is the all-time high again.
Yeah.
The rupee has depreciated, and it could be intentionally or actions by the government so that we have better exports and better dollars coming into the country, right? But the it has an impact. What if the rupee appreciates significantly and goes to 72 rupees? It's a significant
So
impact.
purchase power parity also plays a huge role.
Exactly. So this foreign exchange risk is something again one has to manage. And fifth is the credit risk. When you're dealing with the customers, the kind of you don't know the customer's financial stability. While you may ask or do the study before entering into the contract, take their financials and assess their credibility.
Right.
But still there are uncertain events which can pose the companies to collapse, right? Anytime. So you need to make sure you have the proper appropriate credit risk assessment and the planning which is there. Okay. And last but not the least, and the list is endless, but I'm just in the interest of time, is a technology risk. There's a cyber risk which we talked about, the AI confidentiality, right? So likewise there are technology risk which is there. Now how do we mitigate all of this? You asked me a question, is how insurance plays a significant role in all of this. Insurance does play a large role, and one example I give you about the Wimbledon. So same thing, we as an organization take multiple insurances. One is the cyber liability insurance, because if there is a cyber hacking which happens, then the insurance company intervenes and they compensate us. The second is the D&O, directors and officers liability, because we keep giving a lot of statements, a lot of contracts with the external party or stakeholder government agencies.
Right.
So we take something called D&O. If in the process, if there is an error, unintentional error, so if the companies got sued and the directors are got sued, the insurance company compensate. So that is D&O. Then there is EPLI. EPLI is employees performance liability. It's basically when there is a discrimination case filed against the company by any employee, then again
so discrimination between the
employees,
All
between
right.
the employees, then there is a insurance company who will compensate that loss. That's called EPLI. Then we have workman compensation. Then the third party insurance, where somebody from the outside the organization has come to meet you for interview, or it could be vendor, anyone, and something falls on top and they break their head, they sue the company. So you take an insurance. In that case, the insurance company compensates. So like this, there are multiple insurances which are there, and even the insurance business is evolving now with the COVID. And yes, for the organization, it is important to have this risk assessment in place and keep reassessing at every stage and keep monitoring and addressing how that risk can be mitigated. So it's extremely important.
So, sir, after hearing from you, I've got an insight that insurance isn't a small thing where you just pay the premium and sit and watch. It really helps you in the time of need.
Absolutely.
And the Wimbledon example is just mind-blowing, absolutely.
Yeah.
Right. So 90 million initially sounded a huge amount, but 100 million sounded a bit more than that, for sure.
Yeah.
Right.
Pretty interesting what I've learned, right, based on what the company focuses on. One thing I'm realizing here is that there seems to be that idea of inclusivity in the company, the idea of all, and how it also kind of benefits both socially and economically in a way. That's one thing I've started noticing in this in the company.
Great. Yeah.
So is that a core principle that's also followed, or is
so
it just there?
Absolutely, you're right. As I said, it again goes back to the values of the organization and what kind of values you want to focus. Now, we as an organization, we when we are operating in 8 different geographies, it is important that we bring that cultural, we understand the cultural differences, but
Yep.
we bring the with common everyone with common objective, and we treat with common equality, and we embrace the the differences, uh, uh, giving equal opportunities to everyone,
Absolutely.
and giving equity in everyone. So I think there's a recent talks difference between equality and equity, right?
Yeah.
So so we embrace giving equity in every aspect of work we're doing. So we do have a institution which is formed by a group of volunteers in the organization from different geographies, and I'm one of the council member of that. It is called DE&I, Diversity, Equity and Inclusivity,
Okay.
where we focus on identifying the differences and bringing that change in the organization. So some of the key achievements what we have done is that one is that we focused on bringing the differently abled set of people in the organization by recruiting them. Now, how did we do is that we have 2 institutions which are again voluntary groups. One is the corporate social responsibility group, and next is the D&I group, which is diversity, equity and inclusivity. So from the social CSR perspective, we identified the NGOs or the institutions which are providing education to the differently abled set of group. Okay. And one is that section, and once they completed their education, and we also provide the advanced training on the new age technologies to this set of group, and once they've completed that, from through the DE&I, with the help of recruitment team, we hire these people in the organization. So it's an end-to-end solution what we have fixed, where we are also providing education, we are also giving an employment opportunity, right? We don't stop at one particular level. Now similarly, we are now working on giving education to the transgender group, because that's a group where many a times, especially in India, you find them in the traffic signals. Why? Because they do not have the proper education. Why they do not have proper education? Because they are not accepted in the social community, right?
Yeah.
And why they're not accepted? Because there is no proper infrastructure and there is a taboo on them, right?
They're not accepted because they're not accepted, they're not educated.
Exactly.
Which gets them to there.
Exactly. So we thought we partner with an NGO who is basically giving education to that set of group, and also provide the job opportunities to them.
Absolutely.
Now there are bunch of challenges, honestly speaking, and as simple as for this transgender, when we in the office, what kind of toilet systems to be provided? You have male, female, and what for this transgender, what kind of toilet system? As we are thinking that deep level to making sure we provide a safe and acceptable and equity environment or infrastructure for this set of people.
So you use the word you're working towards educating them. So by educating them, you mean education as a whole or financial education?
No, education as a whole.
As a whole.
I mean education in the area where they are interested.
Right.
Someone could become a finance, someone would want to be a developer, someone want to be different.
So the doors
fields
are open.
Yeah, the doors are open. We are our purpose is to educate that set of group so that they are well received in the society because of their intellectual and not because of their gender or anything. Right. So that's what we are trying to do, and the organizations. I'll tell you, thanks to pandemic, in one way, the woman who has come back from taking a break. Okay.
Yeah.
And the break could be due to the children, or break could be due to emotional challenges, or break could be general sabbatical, and most of the cases woman has come back because there's a work from home opportunity available. Okay.
Yeah.
So the woman can now work from home and also manage the household stuff and also manage the kids. So under the banner of this D&I, we have encouraged that particular aspect of women coming back to work, and that was a big hit for us, because in our company our average age of the employees is 30 years.
Okay.
And the population diversification was 30% women and 70% men. We wanted to move that 30% to close to 50%.
50%.
And this women comeback program has helped move from 30 to 35%, a small increase in a couple of notches. So this has not only helped from the achieving this diversity, but also helped in the overall delivery or this sustainability or from the outcome perspective for the organization.
So that will be all for today. A big thank you to Mr. Lakshmikanth for sharing his invaluable insights and expertise with us. Your wisdom has been enlightening, and we are truly grateful for your time.
So, to our listeners, we hope you have enjoyed this episode as much as we have. Stay tuned for more engaging discussions with industry leaders. So, thank you again for all your time.
Thank you for inviting for this. It was definitely an interesting conversation, and I'm so moved with the kind of questions you guys are asking. This is definitely amazing, and it was a learning journey for me as well. While answering some of the questions, because you asked some of the tough questions to me. And I'm sure and I hope the audience have also enjoyed this conversation. And I wish you all the very best success for your career.
Thank you, sir.
Thank you, sir.
Thank you.